Good morning, Jared. Thank you very much. Again, welcome everyone to our QuickBooks webinar. We'll spend the next 50 minutes together looking at some of the perspectives on QuickBooks and also, more importantly, how you know when it's time to make the move from QuickBooks. So let's take a look at our agenda for the day. So we'll start with some introductions. Jared basically has already accomplished that. Then we'll move to discuss some interesting QuickBooks statistics. We'll move on together to discuss each one of the 5 telltale signs that it's time to move from QuickBooks in detail. Then we'll talk about some of the benefits of the cloud and some options for next steps if you do decide to make a change. We'll have a little Q&A session at the end. Again, put the questions into the question and answer tab at the back. And once we've done that, we'll do a summary and wrap up. Everyone have any questions? Well, great. Let's get started. So once again, Jared had mentioned some of the tools that you will be using for the webinar. On the webinar panel, you'll see at the bottom is the question tab. And so any questions that you have during this session, the question tab is outlined in red. Any questions you have during this session, you can effectively go through. And most importantly, just tell us what questions you have, and then we'll get to them at the end. We are recording today's presentation, so you can share this with friends and colleagues as well. So this is just a brief bio. Again, Jared pretty much summarized my bio earlier. One of the things that I just want to include is I was on the executive education faculty at Bentley University. I also taught at Northeastern University as well as Babson College. So I started with finance systems back in 1985 when I started my first business, where we did actually a little company in Fargo, North Dakota called Great Plains Software. And basically sold that business in 98. And did a bunch of different things and came back into it in 2014 when I joined BlumShapiro. So let's take a look at some QuickBooks statistics. I think it'd be helpful for all of us to really understand how successful and, more importantly, how ubiquitous QuickBooks is. We estimate that QuickBooks has more than 5 million users. And in the small business market, that represents 80% of the market. They have more than 400,000 accountants that use QuickBooks, either themselves or for their clients. Also, QuickBooks Desktop is a very highly rated product. If you look at the ratings from G2, which reflects the collective hands-on experience of your peers, it shows that not just a single person's perspective, but multiple perspective. If you notice, based on about 70 reviews, QuickBooks rating on usability is 8.7, 8.5 on setup, 8.7 on maintenance, and 7.8 on support. So it's a very, very highly rated product. So when you think about QuickBooks, before we get to our poll question, most companies, when they start out or they want to do something simple or want to do something easy, they start with QuickBooks. You know, they go out, they spend a couple $100. It's very inexpensive, really easy to use. You know, companies that are starting out, companies looking to conserve capital, QuickBooks is a great choice. Let me go back. Hold on a second here. So QuickBooks is a great choice. But as companies grow and get more complex, they continue to use QuickBooks because it's easy to use. However, once they start to face the limitations of QuickBooks, what do? Well, rather than replace it, because, you know, the thought of spending anything more than $300 is difficult to all of us penny-pitching finance types, they start with workarounds, manual processes, and spreadsheets. Maybe they start with just a few at first, but then as they go along, they do more and more and more of these types of workarounds. And now, as their companies grow or get more complex, they need to do consolidations, etc. Now they're stuck. They're spending so much time outside of QuickBooks trying to account for all this growth and all this complexity that what happens is if they make a change, they've got to redo everything over again. QuickBooks was initially designed for companies doing less than $5 million, but I've worked with companies that are doing $20, $30, $40 million on QuickBooks. So let's take a look at the 5 telltale signs that it's time for your organization to replace QuickBooks. These telltale signs were developed based on the research that I did and interviews with QuickBooks users who have graduated into a new finance system. Here are the 5 telltale uses when you know that it's time to replace QuickBooks. The first one is monthly reporting is a nightmare. Secondly, you have other systems in your company that don't talk to QuickBooks, creating silos of information. Third is a lack of audit trails, which is so critical to many companies. Fourth, your month-end closing process is taking too long. And finally, you're burdened with lots of inefficient accounting processes. So let's take a look and drill down into each one of these signs in detail. Monthly reporting is a nightmare. QuickBooks designed its reporting capabilities for very small businesses. They didn't really design them for large businesses with simple type of operations. Trying to get reporting in different locations, different product lines, different divisions, and more importantly, different entities can be extremely challenging. So in order to get these more meaningful, complex financial reports, all this data must be manually exported to Excel, summarized, formatted, and printed or distributed manually each month. So what happens if you change a single amount? What happens if there's an adjusting entry that had to happen after you've done all these reports? You got to go through the entire manual process again. What happens if someone changes a formula in your spreadsheet or makes a change to your spreadsheet? Will you know if the column is adding correctly if someone changed one of the formulas? No. What happens if you add in a second, a third, a fourth, a fifth, or 15th, or 20th company? Now you've got to take every single QuickBooks implementation, manually download the data, manually transcribe it into your consolidation spreadsheet. Again, and how much extra time does that take every month? How much time does that take every month? How many extra steps do you take? So sit and think about your own implementation of QuickBooks, assuming that everyone here uses QuickBooks. How many people, how much time are you spending each month doing that? Is it 10% of your time? Is it 50? Is it 10% of your time, which would be what? 4 hours a week. Is it 20% of your time? 8 hours a week, or about 30 hours a month. All right. If you look at that, and you look at if you're in finance and the average salary is $100,000 a year, or 120, or whatever the number might be, if you're wasting just even 4 hours a week doing all these manual processes, all right, that is a $10,000 per year savings, or money down the drain if you're using QuickBooks. Next one that is one of the telltale signs that it's time to replace QuickBooks is that you have disconnected critical systems. QuickBooks was designed to be a standalone financial system. Let's face it, as your company grows or you acquire new divisions, new entities, your systems become more complex. You need systems to manage if you're a for-profit, CRM, time and billing, sales orders, production, if you're scheduling, delivery, fulfillment. If you're a nonprofit, you need systems to be able to manage your donor management, fundraising, payroll, human resources. All these systems are not connected to QuickBooks. So each month, QuickBooks was designed to stand alone, creating disconnected silos of information, which is very difficult to manage. Each month, you have to make manual entries, often at the end of the month, to get this data over the financials. By making these entries at the end of the month, do you really have any visibility into the results from these systems during the month? No. If you're closing your books and you're doing a good job in closing your books in 10 days, that means this data doesn't get into QuickBooks till 10 days after the end of that month. What kind of decisions can you make within the month with that? You can't make those kinds of decisions. So again, the second telltale sign is disconnected manual systems. Multiple systems, again, and more importantly, very difficult to manage in a series of, again, manual processes. How much time do you all spend each month taking data from other systems and entering it into the QuickBooks system? And taking data means, running the reports, dumping the data out if you happen to have an export function on it, and bringing that data over. Is it 5% of your time? Is it 10% of your time? Again, this is another one of the benefits of moving away from that type of system. The third one is a lack of audit trails and controls. And this is what's most troubling for CPA folks like me, is that, again, QuickBooks was designed with a small business in mind, where an owner or owners can wrap their hands around every facet of the business. In a growing company or a more complex company or a diversified company, no one person should be able to keep track of every transaction. Strong financial and audit controls become very, very critical, not only from a separation of duties standpoint, but most importantly, from an audit trails and control standpoint. One of the things that QuickBooks lacks are strong audit trails. One of the things that, again, I thought I saw a survey at one point that said that, in fraud investigations that I think our firm worked on, 75% of the people that were subject to fraud were running QuickBooks. And that's because QuickBooks has a feature that allows you to delete a transaction, not to reverse a transaction, not to void a transaction, although you can do that. You can also just plain old delete a transaction. And with no audit trail, with no tracking of who did it, etc. So that is a significant problem, and you have no insight into who made those changes to the data. Right? Try explaining that to your accountant at the end of the year. Again, but a lot of people mitigate that by having, separation of duties, etc. But, the ability of QuickBooks to just delete a transaction is very, very troubling. The next way you understand that it's time to move away from QuickBooks is your month-end close takes way too long. And typically, a benchmark that I've defined is more than 15 days. And also, when you think about it, if you have multiple, one second here, sorry about that. If you have multiple entities or multiple consolidations and revisions, how long does it take you to close your books? And again, the whole idea behind you dumping all this data or a spreadsheet and then rolling up this consolidation manually or the closing process manually, now you make a change, you're going to go through the process all over again. Typically, a strong benchmark for closing the books is 10 days. People are trying, a really good best practices benchmark is the book should be closed in 5 days. And again, the reason why you want that is by closing the books in a rapid period of time, you can make decisions going forward. If you don't close your books for 20 days, actually, I worked with one client that was running QuickBooks. They're about a $20 million software company. They never closed their books. They never closed their books. They never consolidated their operations. How can you make rational managerial and management decisions if you don't have good data? Right? And the most important thing is that you're looking backwards and you're unable to look forward. So again, that's the fourth telltale sign that it's time to replace QuickBooks, when your month-end closing is taking more than 15 days or even more than 10 days. The final kind of reason that I've seen is you have inefficient manual processes. QuickBooks is a great system for simple businesses. It was never designed for some of the complexities that so many companies that I speak with put it with. All right? If your company has multiple entities, intercompany transactions, eliminations, consolidations, the information must be entered multiple times. But again, I keep stressing this point, but you make a change. We had one client that had almost 25 entities they were managing on QuickBooks. And their consolidation process used to take 30 days. Because invariably, because they were in a growing business and it was a very dynamic business, something would change. And they would have to redo the consolidation over and over and over again. And most importantly, with all this time taking in all these processes, what is the visibility you have into information? Again, it's an accounting system versus a management system. An accounting system looks backwards. A management system gives you insights to look forward. And having all these inefficient manual processes doesn't allow you to do that. If you're a company that's growing, again, the way you combat these inefficient manual processes is you hire more people. If you're a company that's a growing firm and you've taken on new business or taken on, or basically have needed to consolidate operations more or set up new divisions or set up locations, the way that a lot of people deal with that is they hire new staff. One of our clients is a $700 million company. They added 50 locations with a non-QuickBooks system, and they didn't increase their finance staff. Some of the reasons that people come off of QuickBooks. So basically, one of the software vendors, Intact, did a study on why, when people graduated from QuickBooks, and again, one of the products we work with is Intact, and Intact, about 75% of their customers in a reported result have come from QuickBooks. So again, if you look at the results of the study, the research I did, it's really not that far off. So, they're struggling reporting and they can't analyze operational data. QuickBooks is a financial system. It doesn't allow you to analyze operating data. So if you're a for-profit, room nights rented. If you're a nonprofit, number of clients served, number of meals served, number of people placed, amount of money raised. Second one is, again, inefficient manual processes that are draining productivity. A high dependence on spreadsheets to run your business. You shouldn't be using a spreadsheet to run your business. You need to be able to drill down into information that you're able to do and make good decisions with. You have multiple locations of currencies. You need real-time access to financial data, and you require financial consolidations for external reporting, banks, board members, and auditors. Okay, so with that in mind, let's take a look at what is the impact. What is the impact of running of some of these challenges with QuickBooks financially? I think I mentioned it a few minutes ago, talked a little bit about, what the potential impact is, but let's drill down and let's take a look at another study that Intact did. So what is the economic impact of some of the QuickBooks challenges? All right, so Intact did a study. Again, the cost area was inefficient in financial and operational reporting. Obviously, we talked about that. What are the drivers? Manual offline reporting, which is what a spreadsheet really is. Time spent aggregating data and manipulating data. Inability to effectively distribute reports to internal and external stakeholders. Right? So basically, one of the challenges is there is no system within QuickBooks to schedule reports, to be able to send reports on a monthly basis automatically. It all requires human intervention. And what is that economic impact? The study that was done by Nucleus Group for Intact showed it to be one FTE, one full-time equivalent, or about $100,000 a year. Reduced finance productivity. Again, manual error-prone processing workaround and a lengthy close process. That was estimated to be one FTE a year. Higher IT costs. Again, implementation of non-cloud-based hardware, software, and networking. And the impact there is thousands of dollars either spent on internal IT or outsourced IT resources. And the one that I think is also very telling is higher audit costs. If your books are not in line, it's going to take the auditors a longer time to do your audit and obviously to review reports and ensure compliance. So that is the economic impact of staying with QuickBooks. So what's next? What's next? What's the next step? I mean, a lot of you in this survey have experienced these telltale signs. I hope you're able to better understand them, and you better understand what the financial impact is. So maybe you're thinking about making the switch to what's next. Well, let's take a look at some other considerations as a starting point. And the first starting point is, will you use another on-premise installed solution or cloud-based solution? And again, more and more of the folks that I talk with, cloud is the way that they're going. They really don't think about on-premise. But why I like this graphic, because basically what it shows is that although it looks like an iceberg, although the cloud and on-premise solution from the surface looks like it costs about the same, when you add all those hidden costs of customization, IT personnel, hardware, upgrades, additional finance professionals, training, the on-premise solution becomes significantly more expensive. And the other thing, from a security perspective, again, there is a false sense of security that people think about when they look in their little server closet and they say, oh, my finance data is sitting in that server closet. It's nice and safe and secure. Well, it really isn't. Companies that do cloud-based systems spend millions and millions of dollars each year on security, white hat testing, penetration detection. And most companies don't have those resources. So any person on your network that's connected to the internet via email has potential risk to be able to penetrate those systems and to be able to gain access to those finance. I mean, you look at what happened. You look at what happened in the NSA with the NSA recently, where the vendor of Kaspersky software, they actually embedded a routine in their antivirus software that allowed them to take data from the NSA. So think about that. Think about how they think that they're using security software and virus software, and they're all nice and safe and protected, but they really aren't. All right. So look at some of the hidden costs in on-premise, and I think more and more this is a bit of a fait accompli. I think that us being accountants, and I'm an accountant as well, and conservative, and not really one of these people that like to push the bleeding edge of technology. Cloud solutions, 5 years ago, I think were less accepted. I think pretty much now it's pretty standard that folks in thinking about looking at a new solution are going to consider the cloud. And I do think that moving to the cloud makes the most sense. So let's talk about, just real quick, about some of the benefits of the cloud and clearing up some of the imperception of the cloud. The cloud isn't really new. It's really been around for a long time, and the cloud is safe and secure. All right, when you're doing online banking, you're using the cloud. Even though the data is stored somewhere else, again, these vendors spend millions and millions of dollars to secure that data. The nice thing about the cloud is you can access it anytime and anywhere. You don't need expensive systems to be able to provide remote access. The nicest thing about the cloud is you can run it on any device. You can run it on a tablet. You can run it on your phone. You can run it on a web browser. Anything with a web browser and access to the internet is able to use the cloud. Again, one of the things, actually, I got an interesting story about a client I talked to the other day. People who are doing on-premise, I always ask them the question: do you back your data up? Our data's backed up every day, or our data's backed up every hour, or our data is backed up every minute. Then I ask them the next question, and the next question is, when was the last time you tested the success of a backup? When is the last time you took a backup and you did a restore to see if the data restored correctly? I got a phone call the other day from one of our clients, a pretty sizable medium-sized nonprofit, that basically when they had a crash of their server, they went to restore their backup. The backup was corrupted. They never tested the integrity of the backup. And as a result, they lost all of their data. All of it. Now they're looking to see if they can find a firm that can be able to reparse it or kind of pull it back together. But at this point right now, they've lost all their data. With the cloud, you don't have to worry about that. The cloud is backed up perpetually. Biggest thing with the cloud is you have to provide infrastructure. Don't need any routers or switches or communication hardware. Just a simple connection to the internet, and you're good to go. And most importantly, cloud systems are always up to date. One of the biggest challenges and frankly, when I ran my Great Plains practice back in the 80s and 90s, we made a lot of money on updates. Great Plains updated their software every year. It was a $20,000, $30,000, $40,000 consulting engagement to do the update because, we had to run all these reports, then we had to back everything up, then we had to test the backup, then we had to make sure that, then we would do the upgrade, then we'd run all the reports again. With cloud, updates are always included. So that's some of the benefits of the cloud. Now, one of the options is to go to QuickBooks Online. Obviously, I think most people are using on-premise QuickBooks, and you go to QuickBooks Online. Well, universally, and I don't know what people may disagree, but this is, again, the same G2 user rating, user-driven rating between QuickBooks Desktop and QuickBooks Online. QuickBooks Desktop got a 4.1, QuickBooks Online got a 1.9. Before I joined Bloom, I had a small business that I ran, and I decided to make that switch from QuickBooks Desktop to Online. I absolutely hated QuickBooks Online. It just wasn't intuitive. It wasn't easy to use. It was nothing like QuickBooks Desktop. So, make your own determination. The other option is QuickBooks Enterprise, and QuickBooks Enterprise has been around for years, all right? But one of the things that they don't tell you is even though it's accessible via the cloud, it's a hosted solution. So it's the exact same product as QuickBooks with some additional modules that is a hosted solution. So you still have, so you're able to deal with the database backup, but when you're doing updates, you still have the same issue. You still have to go through the update capability. Now with QuickBooks Enterprise, they have done something with the multi-reporting, but it's still a local hosted application with limited scalability and prone to the same errors and corruption issues that regular QuickBooks faces. While QuickBooks considers it a cloud solution, it really isn't. And more importantly, as I said, you have the same upgrade issues. So now you want to think, okay, maybe I should go beyond QuickBooks and open up to other vendors if your company is ready to graduate from QuickBooks. So there are several cloud-based vendors. We work with one of them, and you got to figure out which one's right for you. So to make the choice, you have a couple of options. If you have a complex business growing quickly, there's some advantages of having a firm come in and do it for you versus going directly to the vendor. So, so the choice you have is have somebody do a software selection project for you. If you don't have the IT infrastructure and the IT support and the finance infrastructure to do it yourself, you're going to have somebody do it for you. Most of our clients actually do it internally, and they go with the vendor direct, and then they basically make their own decision. So those are the couple of choices that you have about next steps. I'm going to talk a little bit about Intact, and then we'll wrap up. We got about 20 more minutes to go on the webinar. So Intact is a solution that we use internally, as I said, and that we represent internally. 75% of Intact's customers have graduated from QuickBooks, so they really understand the needs of those users. The interface is very much like QuickBooks, but the thing that Intact adds is the ability to consolidate companies and entities in one place, accessible anytime and anywhere, and that's very, very valuable to our customers. More importantly, the ability to track non-financial data within Intact is very important, especially to the nonprofits that are looking to show impact. One of our customers they're multi-entity. They've got, I think, 35 different entities, and they use Intact on a dashboard. The CEO merely uses not this particular dashboard, but his dashboard to run his entire company. So every morning he comes in, he logs into Intact, and he basically sees all of his key metrics. Here's all my locations. They're actually in the restaurant business. Here's the profitability. Here's the same-day sales. Here's the expectation against budget. And then when he has a question, rather than sending somebody an email that gets buried in a whole host of emails, or rather than picking up the phone and calling somebody, he merely clicks, drills down, and he gets right to his answer. And he's able to make better decisions because he has instant visibility to all the key data that runs his business. all of his point of sale systems feed directly real time into Intact. So he's not waiting to the end of the month to see this data. He gets this data right away, and then he can react more quickly. They'll do it. And we did a case study on this particular company, and because of his implementation Intact and his ability to get data at his fingertips, year over year, he saw a 300% increase in profitability. All right. So let's hear from some Intact users who have graduated from QuickBooks to Intact. So just take a minute and read that review. Again, this is a software company. Again, and there are a lot of other reviews like that. We have nonprofit reviews that talk about the efficiencies gained and the ability to better manage operations, and using the dashboard to publish key metrics for people within the organization. So what does it all cost? And again, this is just very, very rough numbers. Obviously, if you're interested in Intact, drop me a note and certainly discuss this with you. But typically, Intact, like other cloud-based software, is priced on a per user per month model. So basically, all the modules cost $2,500 a year. So versus old on-premise software, you'd buy the general ledger, you would buy payables. If you didn't need receivables, you would buy receivables, purchasing. With Intact, you get all the modules for a price of $2,500 a year, or about $210 a month. Then for each business user that you add to it, again, if you've got 4 or 5 people in your finance department, it would be about $210 per user per month per year. And then implementation, typically, again, this is a broad range. It's about 1.2x of the software. So, I know that a lot of people have a bit of sticker shock about that, but when they say, well, geez, I'm paying basically next to nothing for QuickBooks, and I get that. But just think about the amount of hours that you'll gain in a day. Think about that impact cost. Think about, the efficiencies they've gained. I think I don't know if I mentioned this before, but every time we work with a new potential client, one of the processes we go through is we do a return on investment analysis exercise. And it's a little easier in smaller companies. Sometimes in larger companies, it's kind of hard to do, but typically the majority, so what we do is we sit down and we interview them. We say, we talk about how much time will your managers gain in a day? How much time will your accounting staff gain in a day? What's the value of better information? What are the savings you're going to save on audit costs? What's the savings in infrastructure? And then you balance that against the cost of a new financial system. And every single company that we have, we've worked with has achieved at least 175% return on investment and a 6-month payback for their investment. So again, and that was echoed by Intact. Intact hired this company, the Nucleus Research Group, to do an analysis of a couple hundred of their clients. And what they found was a payback period of less than 6 months and about a 200% ROI. So although the initial sticker shock might be high, when you start to add up the efficiencies and the value of better information. We had one customer that was doing business in a foreign country. They had like 7 or 8 entities in a foreign country. And basically, they were not using any type of multi-currency capabilities. So they would set a currency amount at the beginning of the year, and they would use that same currency amount at the beginning of the year. And when you looked at the impact, they were losing like $100,000 a year because they didn't have any visibility into the gains and losses as the currency fluctuated. We had another company that was looking to get acquired, and they were running QuickBooks. And they had multiple entities, needed to do a consolidation. And the people looking at the company said, hey, we'd like a consolidated statement. And they couldn't produce one. So again, this is some of the impact beyond not just taking a look at the cost, but look at some of the benefits that you'll have. So I guess we're at the point in our program where we would like to just open it up to Q&A. I don't know if anyone has any questions. So far, I don't see any questions in the. Jared, do you have any questions in your queue?
Yeah, Dave, I have a question here asking, what is the biggest difference someone would see in moving from QuickBooks to a software like Intact or some of the other options?
Well, I think like anything else, thanks. That's a great question, actually. Thanks. I think in my experience, it's never easy implementing a new finance system. I think it takes a lot of effort, but I think that pretty quickly, I mean, I think just eliminating some of these telltale signs, I think, is the first benefit. People that have implemented Intact that came from QuickBooks, they're at the point they can't believe that they used to use QuickBooks because of the ability to get instant access to information. Again, it's a real finance system, and it takes the implementation process. I'm not going to sugarcoat it. Like I said, I've done 250 of them. It's a bit of a challenge, but the good news is that we as a firm have done so many of them that our process really works. Our process really, really works and works well. We come out and we do a review of the processes and do a design of the account chart of accounts and, basically optimize the business processes and look at the reporting requirements, et cetera. Then we build the Intact environment. Then we, instead of doing back when I was doing, most of my implementations were back in the 80s and 90s, we did parallel systems. And, right now, those, that is shown to be not the best way to do things, is to do parallel systems, because it just takes way too long. It's like a system test. We take a series of transactions, we run them through Intact, and then we agree on the results. So, and then we help people go live by doing our deployment assistance. So I think it's, there's always a little bit of pain in the beginning, but I think that once people get through that initial implementation period, every one of the customers I've talked to are very happy they made that decision.
Dave, one that just came in, and I'm not sure how if we want to speak to this exactly, but someone asked if we could compare and contrast Intact to Microsoft Dynamics. I'm not sure if you have off the top of your head.
I can easily answer that. Is it, if it's Dynamics GP, I know a lot about. If it's Dynamics GP, I know a lot about it because I was on the initial advisory board that created that product with Great Plains back in 1992. If it's Dynamics 365, I know a little bit about it. I've done, some investigation into that product. So, if it's Dynamics GP, again, the product was designed 20 years ago. It's an on-premise product. I mean, I actually did the first implementation of Dynamics GP in the Northeast. It didn't go very well. The product wasn't really ready for prime time, but I think the Dynamics GP it's a great product, but it's still an on-premise. It's an on-premise solution. And I think it has all the same headaches of an on-premise solution. And interesting enough, now if you're talking about Dynamics 365, which is kind of Microsoft's new latest and greatest, it was supposed to be released last year. Now it looks like it's going to be released next spring. So it's been pushed back quite a bit. But Microsoft's objective is to basically replace all the Dynamics GP customers with Dynamics 365. So compare and contrast, again, one's a cloud-based solution like Intact, one is an on-premise solution, and I think the whole discussion we had about, they're both good products, but also one is based on technology that's pretty much almost 25 years old. It was designed and initially conceived in 90 by Great Plains, and it was released in like 92. The first things came out like 92, 93. So it's a 25-year-old product, and I've looked at it recently. It hasn't really changed much. It's added a lot of modules, a lot of functionality, but I'm a big fan of the cloud, and I think the cloud is the best way to go.
Perfect. And it looks like we have one last question here, Dave. when it comes to these telltale signs that you talked about, what would you say is the sign you see the most or hear about the most when you're talking with clients?
Yeah, great question. I have to say the consolidation reporting multi-entity thing. That's the biggest thing. I mean, the whole, and everything kind of drives from that. Having to download data and put it into a QuickBooks format and format the reports in Excel and distribute the reports manually. I think that's something that people see the most. And if it's in a for-profit kind of company, if you're a for-profit kind of company, the hindrance on growth. You can't grow your company. The only way you can grow your company is by adding more staff if you're in this arcane system. I mean, I think that's really one of the big things is that it really is a hindrance to growth. If you're in a nonprofit, we're doing a seminar on December 7th on success metrics for nonprofits. It's really hard using a product like QuickBooks to demonstrate what kind of impact you've had because there's no way to track that. The whole idea in the success metric is, what are the 3 key metrics that show what your organization is achieving? I mean, I did the PanMass challenge for 9 years until I hurt my knee. Last year, they raised $47 million for Dana-Farber. That was one metric. Second metric is 100% of every dollar raised goes to Dana-Farber. So that says everything about that organization. And in a nonprofit, more and more nonprofits are looking to have that like I attended the Mass Challenge event, which is a kind of a startup entrepreneur competition. And, their metrics are that they've created, 25,000 jobs in the state of Massachusetts. Those are the kinds of things that a product like Intact will track that a product like QuickBooks won't. Okay?
Great. Thanks, Dave. I think that's all the questions we've got.
Great. Well, I think it's time to wrap up. So I'd like to, wrap up the discussion and come to some conclusions. So we started our webinar today really trying to understand really what, if you're using QuickBooks, one of the 5 telltale signs that it's time to maybe consider replacing QuickBooks. And we covered those 5 in details: monthly reporting nightmares, disconnected critical systems, inefficient manual processes, time to close. And I think that, what I wanted to show you today was what those issues are. More importantly, what's the financial impact, because we're all pretty much financial folks here, and then some potential next steps you can take. So I've enjoyed the webinar today. I want to thank everybody for the time and attendance and interest. And, you'll be, I think you'll be all sent a follow-up recording of the webinar that you can share. And if you have any questions at all, my email address will be with the follow-up information. Send me an email, drop me a note anytime, and I'll be happy to answer any questions you have one-on-one. Thanks very much.